Hi guys, it's Josh Brown. I'm here with my friend Howard Lindzon of Social Leverage and StockTwits fame. What's up, Howard? You could speak. You have a microphone on.
Hello.
So I didn't tell you what I was going to ask you.
My first TV appearance in forever.
Don't be
nervous. On CNBC?
No,
Oh.
Almost. I didn't tell you what I was going to ask you, but I wanted to do a thing about the difference between venture investing and public equities, because you're one of the few people that I know who's done both very well for a long period of time. What do you think is like the biggest difference between the investments you make in venture and then the stuff you trade on the NASDAQ, on the New York Stock Exchange?
All right. So, in a quick way, I'm a trend follower. So I think from a trend follower perspective, both work. I'm not trying to be the guy that invents anything, whether it's a stock or whether a trend that's in the stock market or in the startup world. But in the liquid trading world, the idea is you can't let a trade become an investment. And when in the startup world, when I'm writing the very first check into a company, it's an investment. You can't trade.
Right.
And so in the investing world, you can let an investment become a trade. And that's what's exciting about the private world. Over the last 10 years, you can start letting investments theoretically become trades because liquidity is moving down the stack. Because private companies have stayed private for so long, leave it to financial smart people to figure out solutions to this.
Right.
And so over the last 10 years of this boom,
things like second market
second market was one of the early. They were too early. Right. And the reason second market was too early is because at the time there was the goal was to be public. In 2006, when second market was coming out, in 2007, when this whole idea of, there was really just kind of Facebook and Zynga and a few companies, and those CEOs, Zuckerberg or Mark Pincus, if you came to them and said, we're going to bring liquidity to your early employees, they would say, screw that, we can't have our cap table messed up.
Don't do that.
We've now flipped because of this market, and now it's almost becoming an employee benefit. So kind of jumping off topic, but if you're a CEO of Uber, you need to give liquidity to your best employees. Otherwise, they're going to take their paper that they've earned over 4 years and go hop to the next company and collect paper. So that's been going on for 6 years.
Oh, so now the private market
So you're in an area where the private market there's this private-public market that is going to be insanely, is going to be the biggest market in the world.
But you still can't be a true trend follower in private markets to the same extent that you could.
Let me explain to you how I do it.
Okay.
So I've been writing about this for 10 years. There are smart people on the web. You are one of them. You are, even though you don't see yourself as a trader, and you're not, and even though you don't see yourself as a entrepreneur, you are, and even though you don't see yourself as a great investor maybe, or as a great...
How do you know how I see myself?
Because you just see yourself as a Long Island, you're way over your head. This is all a miracle. This may not even be happening. So I don't know that. That was probably rude. But what I'm saying is you see things that other people don't see because you're experiencing life. You have your eyes and ears open, and you are like a mini Soho, right? And so stuff that you find interesting is interesting to a lot more people. So I believe there is a way to position yourself, even in the early stage investing world, where you find people that are good at this stuff and you follow them. What's his name wrote that book, The Tipping Point? Malcolm Gladwell. And it was a really interesting book at the time. And the one thing that Malcolm didn't really put in the book was how to make money off tipping points. And so I think if you read people like a Malcolm or you or Fred Wilson or Mark Andreessen, and you apply their thinking to stocks and private companies, they are in themselves writing about things that are about to become tipping points.
So I did that 2 summers ago. I listened to an A16Z podcast with Andreessen, and NVIDIA came up. And it's weird to me because that stock's been around forever and it was a video game company. And A16Z was talking about it in terms of graphical processing units for everything under the sun.
It wasn't going to be a cyclical company anymore.
So I don't think the stock market really understood that as early as the venture side did, because a lot of the things they were funding, they needed NVIDIA chips. And so that was an example where I was able to make a public market investment.
Yeah, and you did good with that one.
And then Wall Street, eventually discovers it, and that's a really good point.
So to be a great public market trend follower. I don't follow public market research. I follow private market venture capitalists.
The tech blogs.
And to be a great venture capitalist, I think it helps to understand public markets, because if I know what the hedge funds are doing, right, I can tell what's going to happen in the private markets. Because private markets end up, if you're Salesforce, you're great. Salesforce has this great core business, and they're buying lots of companies. What entrepreneurs see is when they go to start a business, they want to disrupt the greatest companies in the world.
So when you see Wall Street take something like Zynga and throw it in the trash, and you're talking to private companies that are doing something similar, you know to abstain because you say that trend has already played itself out in public markets.
Yeah.
Why am I going to now fund something in a private market that could be 4 years away from going public?
Yeah, and even more importantly, when I see a group, and there's products on the market like AngelList that I was an investor in early on, they were kind of like the NASDAQ for angel investing. And so when you see pockets of great engineers working on a problem on AngelList, you can go and you don't understand, and you go, why is everybody working on workplace automation, or why is everybody working on drones? And then you go look in the public markets for the purest play. So for example, drones, this company AVAV, A-V-A-V,
sure,
makes drones for the military. Okay, 3 years ago, if you saw all the action in the drone space on AngelList and the venture capitalists investing in all these startups, hedge funds can't do that. Huge asset managers can't invest in those companies because the cap tables are so small. So what do? They go look up, they type in Bloomberg, they type in drone public market pure plays. AVAV pops up. They don't even do their work. They just put it on the books.
Right, we
and
can't,
they ride
we can't
that
own
trend.
the private ones. They're either too
Own
small
the public
or...
ones. So I try and teach people that it's a lot simpler than you think. If you have your eyes and ears open, and if you understand trends, and if you understand catalysts, you have to have a catalyst to help a stock go. NVIDIA's catalyst was it was no longer a regular chip cyclical business. We had been taught that every 3 or 4 years, chip stocks implode because they build up their factories at the wrong time. NVIDIA has no cycle because kids are playing video games 24/7, 365
and
globally.
Server chips and cloud chips.
So
and
it's
AI.
just, and then if it's not that, yeah. So NVIDIA, those who got it right, they didn't get it right necessarily because they're smart. They caught a trend that changed the whole industry.
I also think we've blurred the lines a little bit. So like Fidelity, T. Rowe Price have mutual funds that have made investments in companies like Airbnb, Uber.
But very late stage. So
but they've had to because there's so much growth prior to the IPO. It's almost like the private market has forced them to adapt.
Yes.
And I think they've done well.
Yes.
I don't know in every single case.
They've done well. They're not taking as much risk as people like me. They're putting in piles of money into a proven business, but they will have ungodly losses when things turn because not all these great businesses work.
Hashtag ungodly losses.
So what's happening is money is moving back and forth between private and public markets. I look at it as just like anything else. You've got early stage, you've got venture capital. Then you have private equity, then you have public markets. And I choose to be at the two barbells. I want to be at the very earliest stage and the most liquid,
large caps,
overvalued public stocks. Because those two areas are so connected. And I write about it all the time. I give away this idea, and people just don't somehow get it, but it's not a complicated thing.
I think because your writing's not great, it doesn't translate the way that you...
Well, there's trick. I try and throw in a few miss things to
your
throw people off
prose
the
is weak,
trail.
and that's... Wait, so tell me what...
How do you spell prose?
P-R-O-S-E. There's no W.
There's a W. Long Island, there's a W.
So that's the Canadian in you that thinks there's a W where there isn't.
Yeah, O-W-T.
All right, so tell me about what Social Leverage is doing. Are you guys thematic, or are you looking for just individual ideas that you want to be invested in? Or maybe a mix?
Good question. So Social Leverage, we're on our third fund. We're investing out of our third fund. Our first fund, do it yourself. We had a $6 million fund, friends and family. Then we did a $21 million fund.
I guess I wasn't friends or family at the time.
You were unaccredited.
Okay.
I don't know why.
But what are you guys doing now? Like, what's the next thing that you're?
So my focus
at?
is financial services.
Fintech.
Quick story was when I started a company called Wall Strip. The idea was to build CNBC on YouTube. It became a really popular show when YouTube only had cat videos. And I think that's probably around when I met you. And Lindsay Campbell helped me and the team, and we built this daily show. CBS acquired it, so I kind of became famous for that. And I've parlayed that lunacy into this thesis, which is there was going to be another or 10 more E-Trades. That was the only thesis I had. And because I hated everything. And I didn't like CNBC, and I didn't like Wall Street Journal. And so my whole thesis was, all right, I mean, it's kind of like Jerry Seinfeld. Like, we had a show about nothing, and now CBS acquired us. Maybe I'm not that dumb. I had a little more confidence. And I started investing along this thesis that there was going to be another CNBC, there's going to be another Bloomberg, there's going to be another Wall Street Journal, and there's going to be another E-Trade. And so that, when I saw Twitter in 2007, Fred Wilson showed it to me. I'm like, this is genius. Right. And I started telling all my friends. Andy Swan and showed it to me. I showed all my friends. I said, why aren't people talking about stocks on Twitter? And this is when iPhone hadn't existed yet. There was
and
just
now
a
it's one of the
BlackBerry.
most now it's one of the most popular things to talk about is the markets.
I think this is where I've said this forever. Twitter has completely missed their huge revenue model by not getting in the data side. They own GNIP, but they haven't really pushed into the financial business. But so my idea was to do Twitter for stocks. I came up with the $, which was it's called the cash tag. And back then it was on a BlackBerry. So I sent Fred Wilson a thing. I'm buying $AAPL, and he thought it was genius. That set me off.
A lot of people don't even know that came from you guys.
Yeah, I was the first $,
right.
message I sent to Fred Wilson on a BlackBerry, and he came right back to me and he said, "That's genius," and that was the
hashtag itself. He said, "Is genius."
Yeah, he said that makes it, because what happened on Twitter, there was the hashtag, and if you went to if you searched hashtag AAPL or APPLE, you say, "Oh, I went to the market and I bought a green apple. Oh, I love green apples."
All right, so bring us up through now, though.
So today we're just still investing on that thesis. Third fund. We invested in Robinhood. We invested in Chart IQ. Obviously, StockTwits.
Right.
We invested in Y Charts. We invested in just some eToro, some incredible financial services company. One of the newest ones is a company called Rally Road, which is securitizing collector cars. And it's an incredible company.
Baseball cards.
No, collector cars.
Oh, cars.
Cars. So like Ferraris, Porsche.
Oh, that's cool. How do you do that?
So they go buy the car. They're a broker-dealer, and then they do an IPO for the car.
Come on.
Yeah, they do. And just last week
how many
they
people
sold
could own shares in a car, though?
as many as each car is its own entity. So the app is fantastic. They just
is it a two-way market? Can you short a car?
You cannot short a car yet, but there's now secondary market. This company invented. So while everybody talks about the blockchain, we continue to invest in old school ideas. Meaning, if I told you I was going to own a piece of a car on the blockchain, people go, "What's the blockchain?"
If I buy a Toyota, is that an ADR?
No, but listen to the company. Rally Road, if you download the app, they went last week. They've done 10 IPOs, 10 cars. They've all sold out. The last car was a Jerry Seinfeld-owned Porsche.
Okay.
The only kind of cars that can appreciate in value that someone actually drives a lot is a car owned by like a celebrity.
John Voight's car.
John Voight's car. It's exactly Seinfeld of it. So they put a Jerry Seinfeld-owned car,
right.
$150,000 Porsche, sold out in 6 minutes. So they are the order book on this too.
So now
it's done through a legal brokerage account.
So let's say I buy, so it's $150,000 is the float of the car.
And there's 2,000 shares. There's 2,000 shares, so each share is like $140.
What if I want out 2 weeks later because it goes up?
Okay.
Who buys
so
it?
there's the Hinckley Index. So cars do have an index.
Okay.
And cars do get priced.
So I'm passively investing in cars then.
You're passively investing, but they have already created secondary markets. You get a notification once a month. There is a secondary. There's enough people that want to buy the car, and there's a bid. And if you're quick, you can go sell it. So yeah, obviously people aren't going to trade cars, but the point is at least there's a they've proven that there's a liquidity market for them. So it's a startup. Anyways, they went from selling a $160,000 car. The next day they sold a collector Ford Mustang ugly green car. It was a $16,000 car, kind of like a penny stock of collector cars. Sold out in like 2 minutes.
So there's now small caps, mid caps, and large caps.
It's hilarious.
That's great.
But what it is it's just a beginning. In the end, like with StockX or GOAT, there is going to be a price on everything.
I love StockX. And
StockX is in shoes. It'll be very hard for StockX to move up the stack and do paintings and cars. It'll be much easier.
Shout out to Josh Luber.
Josh is great. Josh's TED Talk is amazing.
Yeah.
So that's something that we're investing in. And socialleverage.com is the website. It has all our investments.
All right, listen, Howard, thanks for coming by. Really appreciate it, and congratulations on everything Social Leverage is doing. Follow Howard on Twitter and StockTwits at Howard Lindzon. And what's the URL on your blog?
HowardLindzon.com.
That's not hard either. follow howardlindzon.com
/CNBC is dead.
for updates on for updates on Howard's blog. Follow howardlindzon.com.